opens. Okay, it's almost as good as the pre-opening rate. About 0.4 is where it's opened. So 11,475 is where the market is opened. That's just a little shy, 10 points shy of Friday's high, as Anuj was pointing out. The Bank Nifty is opened much higher than the Friday high. Friday high was 29,520, you said. It's opened at 29,620. 29,630. I mean, it's like 1% now. Nifty Bank is absolutely the crowning glory of the market today. Up about 1%, 330 up on the Nifty Bank as I speak. I mean, it had all the ingredients of a major rally coming with the rupee and the bonds supporting it in such a huge way. And the HDFC Bandhan deal also now okayed. That's yet another support. So, you know, every which way, 1.2. I mean, it's just not stopping. Nifty Bank is now up 340. And that's 29,700. All these are blue skies territory for the Nifty Bank. It's all-time highs with each passing minute for that index. Nifty also climbing. Now crosses 11,500, 11,504. And the Sensex up 250. And that's 38,300 almost on the Sensex. It's up 0.7. I mean, it's, you know, a no-holds-barred rally across. The mid-caps, you can see mild underperformance because it's up about 0.5%, but that's also a very strong showing. I think the advanced declines will pick up and refresh. I think it's about 4:1, 3:1 or 3.5:1. Stocks that are doing well, I mean, they're all doing well, but up over 2%, IOC, Kotak Mahindra Bank, BPCL and Bharti Infratel. The 1.5%ers are IndusInd, Indiabulls, HDFC Bank, Axis Bank, Reliance. Over 1%, that is Z Entertainment as well, Asian Paints as well, M&M, Power Grid, all of them up. Even TCS, I mean, which should have been actually negatively impacted because of the very strong rupee showing, is still in the green. Is there a red list? Yeah, there is Grasim, of course. There is Maruti, which is showing a 2.4% downtick. Vedanta, inexplicably, is a down 1.2%. NTPC, Wipro, Sun Pharma. So some of the tech stocks are struggling because of the higher rupee, but it's not affecting the big boy TCS. I mean, such a strong market, especially for the Nifty Bank.
Oh yes, in fact, even the mid-caps have opened up on a positive note, 0.5% higher. Of course, the frontliners are taking all the attention away, but the mid-caps are up almost 100 points right now. The market breadth is positive to almost 1,000 stocks on the advancing side, so looking pretty good. Oil marketing companies are the best bet this morning. So IOC, HP, BPCL that you mentioned. DHFL is making an attempt to come back, so 2.5% higher. Dish TV is one more stock that is looking pretty good at the moment, as reports indicate that Bharti Airtel is in talks with the company to merge the DTH business. So keep an eye out on that. NBCC is up almost about 3% or so. The ADAG group stocks are rallying, Rel Infra, Rel Cap, etc. looking pretty good. Mindtree is up almost about 1.5%. And banks are really charging ahead this morning. Some of the penny stocks, the beaten down names, are also bouncing back, whether it's Alok Industries, Punj Lloyd, Suzlon Energy. So just be a bit cautious about the texture of stocks that are moving on the upside, especially on the volume front. On the downside, Lupin is the one that's down almost about 5.5%, as the fourth unit is under the FDA scanner. And Maruti is the other one that is under pressure now, the biggest Nifty loser, down almost about 2% because of that impending production cut. But otherwise, Anuj, it's a good opening for the market. You get a sense that perhaps this 11,500 mark could be something that could be taken out soon?
It's already done that, Sonia, and that's the point we were making all through. This is not a market in which you want to play cute. You have to buy this market. Even on Friday, the market gave you that dip. I should have bought that. Stock of the moment is IOC, and I tell you why. Because it's up 3%, but it's one stock, like we're discussing, HPCL is up 24% this month. BPCL is up 22% this month. IOC is up only 10% this month, and that's because there was an OFS overhang. But it looks like that OFS is not happening, and that's why you're seeing a fresh bit of covering. And with this, rupee strengthening so much, the reason why, despite the crude's hike, you're seeing this kind of move in oil marketing companies is because of rupee's strength, that negates some bit of impact. And now there's not going to be any policy change, at least up until election. So there's a bit of a free play which is available. So that really is your stock of the moment. But Sudarshan, your thoughts on market opening? You said you should buy it open. Should have done that, already making money. But what from here?
Well, this is a market where at least for the Nifty, you should buy the Nifty. Your stops are 10,400. You have to, and gradually during the day, you can actually raise your stops also. I don't have expectations of big momentum today. First, we've had a very large gap up, and second, with all of this gap up, remember Anuj, we are just touching Friday's highs. So that could be a resistance area, but be long, and if not today, then in the next few days there will be gains.
Okay. Well, this is absolutely a no-holds-barred rally at this juncture, and the Nifty Bank is taking it away. Mitesh, is there a trade in the Nifty Bank even now?
Lata, I think the only trade which we have taken earliest in the morning is to take out profits around 29,680 odd levels. Okay. See, this rally is definitely showing signs of continuation. The strength is immense, but it's equally overbought. So I think we will wait it out. We've just kind of cleared all our positions on the Nifty Bank as well as on the Nifty.
Okay, well, the big loser at the moment is Lupin because of that US FDA scan that is underway on the fourth facility. So the stock actually since the start of Feb has fallen from 900 now all the way down to sub 750.
And I think that's a fresh 52-week low as well for Lupin, almost getting there. Thoughts on Lupin, Sudarshan?
It's been an underperformer and it's best left alone. I wouldn't buy it, and there's nothing to short sell. In this momentum market, in any case, pharma is not the sector of choice.
Pharma is not the sector of choice. The other stock which is interesting is BEML. That's also out of F&O ban. So just pull out that stock in the morning. It's looking quite interesting. Any thoughts here, Mitesh?
See, BEML, last time managed to get past his 925 levels. We looked at targets of 1,000. I think that is being met. Around 1025, 1026 is an historical pivot, so maybe some supply might emerge over there, but it's a positional buy still. I think 1150 is what I'm looking at for the stock to hit. So there's still more upside left, but this has been the fifth consecutive week. I mean, this is not the weekend, but this is the fifth weekly bullish candle, and I think again extremely overbought. So around 1020, I would be inclined to take profits and then wait for them.
All right, gentlemen, thanks a lot for joining us and taking us through the market opening, which is quite phenomenal. Atul Suri, CEO PMS of Marathon Trends, now joins us. Good morning. This is really, this is no longer looking like a marathon. This is looking like a sprint. The last few days, where does the sprint take us now?
Yeah, the last few days have been a sprint. But if you go back and look at 3 months and 6 months, well, it's just a bit of a relief. So if you really look at it, Anuj, you know that we've had great fortnight, 15 days. But let's just take it 3 months on a view. You really notice that I personally think that this is a part of a global bull market. And let's look at some numbers. I look at something called the MSCI All Country World Index. It's a 47-country composite index. In the last 3 months, it's been up 9%. So you can say global markets are up 9% safely. It's not just US, but there are 47 countries in it. Something like the Shanghai composite has been up about 14%. Australia, Canada, you know, sedate countries up 10%. And what was India doing till about 3 weeks ago?
Till February 19th, it didn't do anything.
Actually, Feb 26th, when the event happened, when the Balakot event happened, you realize that we were at the bottom of the pack. The 25 countries that we monitor, India was the max underperformer. It was at the lowest of the pack. Post that incident, things have changed. Some switches have come on. We can see it in the FI flows. And even now, on a 3-month basis, we're up 6 to 7%. So compared to global markets, what we are seeing is a massive catch-up rally. So it's been great 15 days, great three weeks or thereabouts, but it's a part of a very big global market. And you know, you can go and find its genesis in what's happening to US bond yields, what the Fed is saying. So we are experiencing a global bull market, and India is doing a very big catch-up. A lot of domestic people are very obsessed with elections. And what is the BJP number? Will Modi be, not be, etc., etc. But I think that is really the minor story. If someone came out and told you that we would have a border problem and we would have some sort of, you know, action happening the way it did, and you will start seeing record FI flows, you will see the market rally, no one would believe you. But the market has a way of surprising. And I think the big story here is a big global catch-up rally that's happening in India. Okay,
so there's MSCI 47-country index. Where is that one headed?
I think that...
since we are a subset of that.
Yeah, we are a subset of that, and I'm looking at 50% of that is actually US. So let's look at the US. I feel that the Dow is very interestingly poised at just sub 26,000. If the Dow takes out this 26,000 level, it corrected a wee bit, but if it takes it out and does a credible breakout, I feel the Dow is going to a new lifetime high. And that it will take massive, sort of surge or push in the developed market space. And the best trade, I think, for the year is going to be the EM. I've been already saying
That's what I was going to ask you.
That EMs is the best trade for the year. So you will see a very big catch-up rally again happening in the EM, and that's why you see these kind of record FII flows. When did you last see? I mean, last week we had $2 billion. We had 14,000 crores in a week. $2 billion in a week. When did you last see that? So this is a part of a tsunami that is happening globally, and its genesis, I think, goes into what's happening with global markets.
Okay, since you asked us when did you last see that, we saw the same kind of numbers in 2014 when there was a pre-election rally. Once again, it's a pre-election time. So I know you're
It's 9 years. Sorry, 5 years.
You're telling us not to get obsessed with this pre-election phase, but historically, when there is a pre-election rally that plays out, how much higher could it take the markets because of this skew?
You really don't know, you know. I mean, I've seen many elections, Sonia, and prices will move, reasons will follow. 1 month back, consensus view was volatility up to elections. Post that, we'll have a bull market. And now we have a bull market. So now what people are saying, oh, we'll have a pre-election rally, and post-elections, we will have a sideways or a dip. Why? Because earnings will not catch up. So these are all rationalizations. Ultimately, it's a screen. And we will find reasons to justify it. But the fact is that, yes, we will see volatility due to elections. There can be multiple outcomes. It's not a binary option. There can be 4 or 5 outcomes if you really look at it, if you read politics. But the fact is that irrespective of that, the bigger thing, the bigger trend is what's happening to global markets. You will have short-term volatility. You will go through ups and downs. But I think that the bigger trend is global, or the scenario that I've been talking about.
Oh, yes. In fact, the global trend is there, and it's about... Today is once again about banking, and the Bank Nifty just broke out, and after that it's added 1,000 points after that breakout, and it's one bank after the other. Now look at DCB Bank. Just see the intraday chart on DCB Bank, and I think it's the market's way of saying, you know, let's now participate in the next bank which is available. And you're seeing that move play out today. Huge amount of open interest build up. There's quite a bit of cash market buying which is happening on this. So a lot of these stocks participating now. Atul, for there's this very strong emotion in the market, right? Fear of missing out.
Yeah.
How to tackle that in this
It'll always be there.
Yeah.
It'll always be there.
For example, on the Bank Nifty.
See,
now, what's the way to play this?
I'll tell you, for a trader, it's a different story. But if you're looking at investors, I encounter them every day. So the fact is that we will wait for elections for certainty to come. When certainty comes, it's going to come at a price. So when certainty will come, it will at a price. So you will have to have a leap of faith. You will have to believe in the bigger trend. And at that point in time, trying to time it. 1 month ago, people were saying, you know what, we'll wait for certainty, we'll wait for elections. Now markets have gone up, people say we'll wait for correction. So the fact is that ultimately you will have to take a leap of faith in Indian equities, the Indian story. You can never time it to the last 100, 200 points on the Nifty if you're an investor and looking at the long term, which is what I really do at Marathon. So you will have to take the leap of faith and jump in. As I said, volatility will be there, but nobody can time it perfectly.
Okay, meanwhile, while you were speaking, I think the market is going up 1 point for every word you say, because it's now up 1.3 on the Nifty Bank.
That's
okay,
dangerous.
Nifty Bank is up almost 400 at this point in time. We should be touching 30,000. The sprint at which it is going, it looks like 30,000 is around the corner. And the Sensex as well, up 300 at this point, 0.8 up on the big indices. And the mid-cap is, I mean, you would say underperformer, but that's up 0.5%. So it's a very strong market.
Yeah, I just want to make a point. Now, I'm getting a lot of feedback again on Twitter that once again Zerodha is down. That's of course India's largest broker. So on a day like today, when the market's surging, a lot of retail might be missing out. That's the feedback that we have. So that's
which probably a lesson that you should put your eggs in many baskets. Because
I think you should just stay with the longer term trend and stop trying to be cute. People try to make money on a day, week, month basis. It doesn't happen.
So there are those people, and there are those who, of course, put a part of their salary every month.
I think
so those
they are
benefited now. But Atul, you were saying that the Dow is looking like it would reach out to fresh all-time highs, and the EMs will be the bigger beneficiaries. What's your pecking order?
I personally think that if I want to start this whole thought process, the thread I would pick up, or the point I'd pick up, is what's happening to US bond yields. You will see October, November, when the
below 2.6.
Exactly, and that's where the big story is. The fear was that US Fed would continue tightening, and post those statements, the rally that you saw in the US was ferocious, and along with that, very often US may rally, but EMs don't rally, like we saw in last year. But the beauty is that I feel the EM market has made a higher bottom, higher top. It's made a reversal. And the big story is that the weighted China, the Chinese markets have on the EM index is very high. And those markets are actually looking like the best global market right now. So I feel that that is something that will push up. And when, as I said, you have a rising tide, all ships.
In fact, in the last 3 months, I think the Chinese market is up almost about 20% or so. So really big move over there.
And it was a gross underperformer last year. It was the worst performing.
Okay, so mean reversion, I guess.
Yeah,
But in terms of sectors, the Bank Nifty seems to be everyone's favorite now.
Yeah,
what about you? What's your pecking order looking like in sectoral terms?
Yeah, so even, see, I'm a trend follower, Sonia. So, essentially, you're not going to find me looking at bottoms and things like that. I will be where the trends are. And clearly the trends is in financials. Bank Nifty is a lead indicator for all my studies that I do for Indian markets. Bank Nifty, whenever it leads and breaks out to new levels, the Nifty follows soon. And what you're seeing is not just a breakout of Bank Nifty to lifetime highs, you're seeing a ferocious breakout. The quality of breakout is very good. The breadth is very good. So that's why it keeps me, why I feel the Nifty will get into lifetime highs and things like that. So I feel that financials, by virtue of its weightage, is something you just cannot ignore.
Okay. Atul, see, this is the economic argument would be the Fed receded in its rate hikes because it saw a slowdown.
Right.
Now, at some point in time, that economic reality will hit. But there is miles to go before that.
Lata, these narratives keep changing.
Yes.
These narratives keep changing. And somehow I say, people look at the screen and change the narrative.
Narrative, absolutely.
Exactly.
Yes, markets make opinion.
That's a reality. However much, it doesn't sound intelligent, but the beauty is like, I have this favorite line, which is, prices move, reasons follow.
Yeah, that happens. By the way, that move on IOC that we spotted, it's just 5% higher now on the stock, looking really good. Your thoughts on oil marketing companies, and also, since you studied some of these global charts, what is crude indicating? Because, right now we are in a party mode, but you never know.
Absolutely. Yeah. I think if you ask me what's the dark cloud, I think it is crude. I feel that the Brent is headed towards 70, but there is so much positivity and euphoria everywhere else that we are tending to forget it. So the day the Nifty is down 100 points, we will be talking about crude and Brent. So the fact is that I feel it is headed higher, but it just always, you've seen in the past, it doesn't mean that we are inversely correlated. If it's within a range or if it's within manageable levels, we can sort of shrug that off. And as I said, this global liquidity markets are going up, so no one wants to talk about Brent.
Okay, so give us levels. And last time when we spoke with you, you were talking about the possibility of 12,000 on the Nifty. I mean, we're hardly 500 points away from that. So what are you looking at in the near and the medium term?
No, I think that we will get to lifetime highs and we will push towards 12,000. And as I said, it's a part of a global bull market and more so in emerging markets. But Sonia, in lifetime highs, you really never try to pick the top. Okay. Because it's like in Bank Nifty, you're trying to call the top. It's going to be very dangerous. So I feel that when markets get into lifetime highs, it's a good point. It's reaffirming your belief that we are in a larger term trend, which I really believe we are in the next 3-year kind of story that I've been talking about.
The next 3 years is the kind of rally you see.
As I said, you will have losing weeks. Don't hold me to that. You had a losing year. And I've been saying we are a part of a bull market. And those have been difficult times if you have been bullish, the last 6-9 months. But the thing is that, as I said, every week, every day is not positive. Markets will go through correction and up and down. But you will have to keep the faith, keep that time horizon. And that's how I've really seen larger wealth created. For a trader, yes, a day, a week does matter. But the larger investor base, I mean, look at even, I think Indian investors are behaving very maturely. You start seeing negative DII flows and you think that, Indian investors are redeeming. The answer is not really. DII is some sort of insurance and multiple strategies. Look at your SIP flows. In spite of having a negative 1 year and most people losing out or having considerable drawdowns, the SIP numbers haven't really tanked. They may have plateaued. But the beauty is that the Indian investor continues to keep the faith. The SIP flows, as I said, are not accelerating, but at least they are flat to consistent in a falling 1-year market, which is, I think, a newness, maturity, which going ahead, I think, should propel things higher.
In this rush to beyond 12,000, who are the leaders?
Financials. In India, by virtue of the composition of the Nifty, by virtue of the darlings for the FIIs, liquidity, etc., you realize that there is no getting away from financials. You look at any portfolio, any mutual fund, you will find that the skewness to financials is very high, and there is no option. There is no option.
Okay. What about autos? I mean, is there like a structural slowdown that you're seeing, not fundamentally, but in the charts as well?
It's a bit of a problem. It has been, you've seen a sell-off. Like I was overweight two-wheelers about a year ago, and we saw that trends kind of, broke down. And even now at the bottom, charts are not inspiring. The bottoming out sort of phase will take some more time. Like you see bottoming out in some of the infra plays. You see even bottoming out selectively, though I know it's not a good day for pharma, in some of the pharma stocks. So there are pockets of reality stocks selectively are also bottoming out. But I think autos will take some time. So you will whipsaw, you will create a good bottom, you will start having some leadership come up, and that's when you'll have a bottom in place.
No, it's really tragic. Maruti is such an all-time winner, but now when the markets are practically at all-time highs, that stock is 30% off its recent highs. I mean, it's clearly not the day in the sun for the four-wheelers, but two-wheelers would be better, you think?
They seem to be showing a little more traction.
A little better than.
A little better traction.
Okay.
So that's
Reliance is not part of this massive push.
Reliance
that's also
it's almost a sector in itself.
Okay.
The oil and gas space, barring the PSUs, is so driven by Reliance. So, I mean, I have a vested interest in the stock, but definitely it's something, for people who've been in the market, have a lot of respect for the stock. It's almost, as I said, a sector in itself, and it has the ability to standalone move the market, which it has been doing.
Okay, so finally then, I know we've been talking all things positive, but what's the biggest risk to this market?
I think the biggest risk to me is crude. The way the Brent crude charts are positioned, I feel that can rally, and at some stage it can come to bite us. As I said, as long as we are in comfort zone, it is fine. The big risk to the market, I think, is not, we are overstating the domestic issues, which is politics. The big risk is still going to be global. It's still, if you ask me, the starting point is US bond yields. I would really keep an eye on that. I would keep an eye on how global markets, especially the way the US markets are shaping out. And if that pans out well, then I think the EM and the Indian story, the knockdown effect would come in. We were gross underperformers. We've done a very sharp catch-up, and I see no reason why we cannot do a little more catch-up now.
All right, Atul, thanks a lot for joining us.
Thank you. Thanks for having me.
Always good chatting with you.
Huge rally. It's 1.5% now up on the Nifty Bank.
Yes, 411 points higher. 29,800 is here. I tell you something, 4 days back, I was just looking at the options data, and at that point, the highest strike which was available on the Bank Nifty was 30,500. And over there also, there was a lot of open interest being built. That is the extent of just one-way rally that we have seen in the Bank Nifty. Just pull out a one-month chart of the Bank Nifty. I think we've seen almost a 2,500 point rally. Could be more actually from the consolidation phase. This is the fresh breakout that we have. Okay, 3,000 points on the Bank Nifty is what we have seen. What a 1 month period. That's an index that we're talking about. The largest index and the largest index. It's like, Virat Kohli is scoring 6 back-to-back double centuries.
If you recall how the NBFCs behaved in 2017, I mean, it became a broad-based rally. Now that initiative has completely gone to the banks, and banks are much larger, much bigger than NBFCs for the Indian economy. Plus, they now have a tailwind of the rupee and bonds. Both of them are propelling them much higher. I mean, any day when the rupee does well, you can almost blindly bet it's an algorithmic trade for the Nifty Bank. It tends to do well. And today, that also has an impact on the bonds. Look at the way the bond market has rallied. I mean, I never expected to see this number going by the amount of bonds being sold by the government of India. You thought that bond yields will continue to keep rising, but look at the way the yields have fallen. So it's a big day for bonds, for currency, and for stock markets.